grade 2 now. Bloomberg's market reporter, Ryan Vestelica, can set us up for what the end of this week anxiety is saying about the...
Let's go back from the beginning and let's wrap it. Official test start time to me. 5 pages, 5 paragraphs each, 5 words each sentence, 5 computer space activity, 5 efficient. Please show the work. You can use your hyper-scientific, you can use any artificial intelligence, but you must show the work. You do not show the work, I'm going to assume.
Tech, as you can see, trades lower as AI anxiety kicks off the last full trading week of the year. Are investors doubling down or bracing for a pop? We discuss. Plus, big deals in big tech with ServiceNow and Intel in advanced talks to spend billions on startups. And a stablecoin giant wants a soccer team? Why Tether is bidding more than $1 billion for Italy's Juventus. But first, a check-in on these markets. We want to talk soccer, but we're talking about the markets are up to under pressure by 0.25% on the Nasdaq 100. As you see, we're off of our lows of the day, but still in the last full trading week, ahead of the end of the year, are people taking some risk off the table? They're certainly taking risk off in the crypto space. We're down sub 90,000 once again, 86,924, off by another couple of percentage points after a downdraft over the course of the weekend. So the mood music, again, speaking to AI anxiety, speaking to some nervousness around valuation, is today's picture. But take a look at some of the individual names. ServiceNow is off by more than 10%, as maybe we still see companies spending in terms of M&A. There is ServiceNow potentially in talks to buy cybersecurity unicorn Armis, being reported over the course of the weekend, could value at about $7 billion. That would be the biggest ever deal for ServiceNow if these reports come true from Bloomberg. And indeed, we could see it just delving ever more deeply into cybersecurity. Intel off by 0.5%, as it too is in advanced talks, we understand, to buy an AI chip startup, that's Nova Systems, for about $1.6 billion. And Tesla, at a record high. Will we close this day at the first record for Tesla since December 2024? The catalysts, well, Webb Bush going more overweight on the stock once again. But other than that, no clear fundamental driver. That is what we're looking at on the day. Let's look at just the course of ChatGPT. And since 2022, I want to show you the growth of the NASDAQ 100. Phenomenal, up more than 100 percentage points. It's more than doubled, of course. But doubts about the AI trade, they're starting to grow too now. Bloomberg's market reporter, Ryan Vestelica, can set us up for what the end of this week anxiety is saying about the belief in this 100% rally since November 2022, since ChatGPT first burst onto the scene, Ryan. We are having yet more and more concerns about the valuations, the run-up in certain companies.
Hey, good morning. Thanks for having me. So yeah, a lot of these concerns have been just sort of percolating throughout the market. Every so often, we'll see them sort of, emerge and go to the forefront. That is sort of what we're seeing right now. It does seem like there's a lot more skepticism, a lot more caution about valuations, about growth prospects, about when we are going to start seeing a more pronounced return on all of this AI spending. And maybe just because it's sort of like the end of the year, people are looking to close out their book. Maybe people are taking a reassessment right now of all the big gains that we've seen in a number of AI stocks and just sort of considering where they might be going in 2026.
I mean, there really is some of the most read stories throughout the course of the weekend, and indeed on this day is the one that Wall Street sees AI bubble coming and is betting on when it pops, if indeed it does. The eye of the storm have been companies like Oracle, even NVIDIA, which has been the pin-up for this year and still remains so in terms of a 12-month trading basis, but of late has taken a hit to market capitalization. Are there any particular areas that we're seeing the most pain, Ryan?
Well, one interesting thing that we wrote about, I think about a week ago, is sort of the constellation of stocks that are more associated with OpenAI as opposed to the ones that are more associated with Alphabet. And for much of this year, any company connected with OpenAI saw pretty strong stock gains. A lot of companies rallied when they would announce deals with the company, with the startup. And now we are really seeing that reverse. There's a lot more skepticism about, is OpenAI going to be able to grow fast enough in order to meet all of these sort of deals and obligations that it's announced? As skepticism around that has grown, you have seen companies connected to OpenAI start to really come under pretty pronounced weakness. You mentioned Oracle, but also in the sense Microsoft, NVIDIA, CoreWeave, companies like this, whereas companies that are more connected to Alphabet and Gemini, which is currently seen as sort of the stronger AI play, those companies have been doing, continuing to hold up in a lot better fashion.
Ryan Vestelica, you're continuing to write upon all of these themes as we tie up 2025. Fantastic to have you kick off the show. We thank you. Let's keep this discussion going. Let's delve a little bit deeper into the signals in the economy, what that's doing in terms of trickling into business. Natalie Gallagher is with us, principal economist and director at Board. Now, that's an AI-powered enterprise planning platform. You provide macro analysis, you provide strategic guidance to global companies on business investment, on economic policy. And what's really interesting is you're sort of telling us and pointing towards your expertise, showing that 2026 is really going to be a prove-to-me moment, right? For 2025, it's been about picks and shovels and infrastructure. 2026, we need the economic upside. We need the productivity gains.
Yeah, absolutely. I mean, so far, right, we've had really broad-based adoption of AI. About 55% of American workers, for example, say that they're utilizing AI. We haven't seen it translate into the productivity numbers, right? And this isn't just with the government data, it's also with private studies as well and university studies as well. So as we get into 2026 to really validate the underlying fundamentals, we're not only going to have to see that breadth, we're going to have to see really meaningful depth of adoption as well.
Natalie, when you're poring over the data, what is the data that we're going to need? Is it going to be in earnings of healthcare companies and financial institutions that actually start to see margin improvement because of AI adoption? How do you get that tell?
Yeah, absolutely. I mean, the first place we'll probably see it is in earnings release, right? The government data often lags behind. You know, we've seen a lot of earnings releases where CEOs have said, hey, we're utilizing AI, we're seeing these productivity gains. At the same time, we're not seeing them show up in as meaningfully as a way as we're going to need to really justify the valuations that are out there, really confirm, right, that we are seeing that productivity growth or that return on the transformational promise of AI.
What we have seen show up is the AI investment numbers driving GDP figures. Many would say that basically 2025's economic growth entirely hinges on a few big names in tech making some extraordinary big investment plans. How wide could the economic shakeout be if indeed we did see a pullback and a questioning of productivity?
Yeah, I mean, it could be really significant, right? 2025, AI spending, CapEx spending, it's really served as a macroeconomic stabilizer, macroeconomic anchor, even as we've seen other parts of the economy really meaningfully stagnate, right? It's really been this promise that's continued to lead growth to not only deliver, but really surpass expectations in 2025. And that's definitely true, right? It continues to be an anchor in 2026. So if we see a meaningful pullback, if we see AI not deliver and sort of that translate or cascade through the economy, I mean, the economic implications are really, really broad-based, well outside of tech.
How broad-based do you think the economic implications have been of China and US and this technology war really we're seeing at the heart of it? How much has that implicated US businesses and in the longer term, do you think?
It's been fascinating, right? Because U.S. businesses, even with sort of this headwind of overall trade uncertainty, it's back and forth with China, they've really continued to deliver, and so that's really positive to see. You know, on the other hand, right, if we do get more and more decoupling with China, the economic implications are also broad-based there as well. We have a reduction in revenue, translates to a reduction in R&D, and so of course the economic implications, based on what direction we take, can be they can be quite extensive. Now, at the same time, if it leads to sort of a benefit when we look at the competition dynamics, then maybe it's a little bit of a win-win for the US.
What's interesting is while we've got perhaps a questioning of valuations in the market, some still manage to rise on absolutely no fundamentals at all. And Tesla is currently maybe closing in yet a new record high, the first one we've seen since December 2024. Now, maybe that's a bit of mood music coming from an extraordinary valuation being given to the private company that is SpaceX elsewhere in Elon Musk's realm. Natalie, what do you think about some of the froth in the areas, particularly in the private area?
It's been really interesting to see, right? Whenever, you know, as an economist, what I look at is cash yields, right? And whenever we end a rate cut cycle or, you know, debatably end a rate cut cycle like we are right now, cash yields become less attractive. And what we need to really carefully watch is, are we seeing meaningful investment in actual infrastructure? And that's what's really driving these extremely high elevated valuations, or are we seeing investors go towards alternative investments because cash yields are quite impacted? And so we're going to really need to see these valuations be meaningful, right? We're going to need to see that the proof is in the pudding.
That it is worth $800 billion. Natalie Gallagher with the macro and the micro for us. We so appreciate it. Principal economist at Board. Now coming up, Juventus shares. Have you been watching them? They are rallying after Exor rejected an unsolicited takeover bid from crypto giant Tether. We dig into that one. Plus, Netflix makes its case for Warner Brothers after Paramount, of course, goes public with its own hostile offer. What did the co-CEOs manage to say? This is Bloomberg Tech.
That's the deal right there. That's the big deal happening right now. That's what's moving the market.
Shares of Italian football club, Juventus. You might call it a soccer club. I call it football. Well, they jumped after crypto company Tether made a takeover bid for 1.1 billion euros, about $1.3 billion. Now, the offer was swiftly rejected by the holding company of the Agnelli family, which owns a controlling stake in what is one of Italy's most distinguished football clubs. Let's get more on all of this with Bloomberg editor in Milan, Tommaso Ebhardt. Fascinating. This family, the Agnelli family, have held a controlling stake for years in this team and indeed own Ferrari and other big auto sectors. But Tommaso, what does Tether have in terms of its game plan?
It's a very fascinating story here from Italy. You know, it's like new money versus old money. Interesting enough, Tether founders are originally from Turin, the city where Juventus was born, and they support Juventus. So they started as a fan, and Arduino, the CEO of Tether, told us in an interview a few months ago that he has been a fan of Juventus forever. And Tether bought a 10% stake in Juventus a few months ago. Was the first football team where a Keep Crypto company bought a significant stake. They also have a board seat in Juventus, and now they arrive with a bid Friday night for the controlling stake to the Agnelli family, Italy's most important industrial clan. But the Agnelli family said, no way. We're not going to sell to Tether. We're not going to sell to anyone Juventus. They've held Juventus for over a century. So far, no news, but shares move. They didn't get up to the level of the price offered to the Agnelli, but they rose more than 14% today in the Italian market in a very difficult moment on the pitch for Juventus. They're not doing that great this year.
Yeah, is that the argument coming from these lifelong fans at Tether that they could in some way manage the business of football or soccer better?
That's a good question. For sure, they have a lot of cash, and in the bid, they said we're also ready to invest 1 billion euros in Juventus, but this is not enough for the Agnellis. Saturday afternoon, John Elkann made a video. John Elkann is the leader of the Agnelli family nowadays. Made a video online saying, we have defended the Juventus value for over a century. We want to stay close to Juventus. We've been with Juventus in the bad and in the good times, and we'll stick with that. Interesting enough, is a very delicate and sensitive moment for the Agnelli family. Why? Because they are reshaping their portfolio. They're the biggest investor in Stellantis. The automotive industry is facing a disruptive moment. The Agnelli have sold some assets recently, including their truck company Iveco to Tata in India. They are now in talks to sell the media asset in Italy to a Greek company. So there's a lot of interest and also a lot of political debate on what the Agnelli families are doing with their Italian holdings.
I started All Nation Restoration to help people. Chase for Business is literally what it says in the name. It is Chase for Business, where I can find everything I need in one place so we can help people get back to life.
Don't just take classes, take charge. Start your comeback today at udoglobal.edu.
Well, hey, wait. You only have so much time, so feed Science Diet. with our clinic.
Yeah, some pushback against Greece's Antenna Group for wanting to have that Italian asset. Meanwhile, Tether's been investing in plenty of Italian assets. It looks like more across the board, whether it's genomics companies or even in media companies as well. Tommaso, it's so great catching up with you. Thanks for staying a little bit late in Italy. Tommaso Ebhardt there from Milan. Now let's pivot into a different world of entertainment now. The co-CEOs of Netflix. They've been making their case for acquiring Warner Brothers Discovery to their own employees. Let's get the latest with Bloomberg's entertainment editor, Lucas Shaw, who's been across this M&A story that is just fueling everyone's attention in Hollywood at the moment. So what is it that the co-CEOs could put across their employees to calm their own nerves?
It was a Q&A of sorts. They first of all stated the rationale for doing the deal, and then tried to address some of the 5, 6, 7 biggest questions that there are out there. You know, is this going to kill Hollywood? What do they think of the Paramount hostile bid? Do they actually think they can get this deal approved? And the kind of the big one about movie theaters. It was as much for the public, I think, as employees. You know, they put it in a filing so that the world could see it. They've obviously been keeping their employees apprised to the best of their ability over the last couple of weeks. And the ones I've spoken with have said it's been pretty status quo with the company.
Meanwhile, of course, what we all wait for in the entertainment world on a Sunday is your note to drop of screen time. And because you've been writing in particular about, amid all of this fury about concern about consolidation in the sector, it's also AI, which is looming large in many executives' head and employees. What do you make of the AI threat right now?
Well, Hollywood is very conflicted. You see certain filmmakers come out and say, I've interviewed a couple of them, and say it's the future. We might as well figure out how to use it and integrate it into our workflow. And then there are others like Guillermo del Toro and Ryan Johnson, who basically said they'd rather die than use AI, or that they will do anything that they can to stop it. You saw a very strong negative reason last week when Disney announced a deal with OpenAI, where a lot of the unions and a lot of workers wondered what the company was doing.
0.99,
Well, reading it with interest. It's also featured in Business Week's The Year Ahead for 2026. Go look at it. Grapple with the future of Hollywood. All things AI from Lucas Shaw. Thank you very much for keeping us up to speed. Meanwhile, coming up, got to keep you up to speed with the world of immigration, the impact on tech. A group of states are actually suing the Trump administration to block a $100,000 fee for any new applications for H-1B visas. We'll be joined by immigration lawyer Hiba Amber next. This is Bloomberg Tech. President Donald Trump's new $100,000 fee on H-1B hires, but it's set to deliver the biggest blow to IT outsourcing and staffing companies. According to analysis done by Bloomberg, businesses like Tata Consultancy Services and Infosys, they're likely to be hit harder than, say, US tech giants like Amazon and Google, but still all impacted. Let's dig into the broader impact with Hiba Amber. She is a partner at Ericsson Immigration Group, working around the clock on issues such as this, I'm sure. And the context is companies that take the financial hit, but also states that try to push back on it. And the latest is that we understand a group of states are actually suing to block this in particular. Do you think that that's going to gain any traction?
I do think that it's going to gain traction because what the states are doing that's different than some of the lawsuits that have already been filed is they're making a legal argument based on their specific state economies, which I think is a really important argument because it goes directly against the claim that a lot of opponents to the H-1B visa have, that the H-1B visa is actually harmful for the US economy. The lawsuit that was filed by California and the 19 additional states essentially argues that this $100,000 fee is going to worsen labor shortages within other important sectors that exist within the state economy by making it more difficult to fill spots for occupations that are already experiencing shortages, such as physicians or researchers or teachers, nurses, for example. And so I think that this lawsuit puts states in a position where they can actually show harm in a way that's more effective than some of the lawsuits that have already been filed.
Their argument is that no presidential administration can rewrite immigration law, is what they're taking. And I think it's the third challenge, at least, that we've seen to this particular fee increase. But on the flip side, the president and the administration would say we need this fee because H-1B is being abused. What evidence is there for that from your perspective, Hiba?
I think the more important evidence is when you take a look at the H-1B filing process in and of itself, it actually has several checks and balances that are already built in to ensure that the H-1B visa is not being abused or misused in any way. And in particular, one of the core components of filing an H-1B visa is to be able to demonstrate back to the government that the filing of this visa is not going to displace a qualified U.S. worker. So I think that what's more important to focus on are the checks and balances and the safeguards that are already in place for the H-1B visa to prevent the fraud and misuse, because the highly restrictive policies for folks that are actually proponents of the H-1B visa create a new category of risk, which is that this is actually going to hamper and diminish the American innovation and the U.S. companies leading the charge on global innovation.
Now, we take it to another extreme. And what's interesting is there's actually blowback, not coming from Democrat states who are suing, but actually conservative lawmakers who are saying that in some ways Trump is supporting yet more legal migration and immigration into the country. They're criticizing President Trump for supporting more visas in particular to allow the entry of high-skilled foreign workers. Is there any mounting further around this that you're hearing, Hiba, or something that companies are worried about, that names like Republican Chip Roy would actually manage to prevent legal immigration at this time?
I think, I think that the concern in the industry is more so based on the data. I think that we're far out enough from the beginning of the year to be able to actually measure the data in an effective way. And I think that what we're starting to see is U.S. companies starting to grapple with the decision about whether they want to continue to invest in other countries where the talent, the high-skilled workers in particular, are more inclined to go, as opposed to, the talent that may be a little bit more concerned about staying here in the U.S. So said another way, I think the concern in the industry is whether some of these larger companies are going to choose to offshore, for example. And another really important component of this is a lot of the folks in the industry are actually specifically watching how other countries are responding to some of these more restrictive immigration policies, namely, China and Canada being some top examples. For example, China recently released the K visa for global tech talent, which is specifically aimed at attracting international tech workers. And that was done in direct response to the U.S. tightening its immigration policies and this new $100,000 fee. So what I think the concern is here is whether the talent is going to be incentivized to choose another country, whether other countries are going to be more inclined to have more open immigration policies in an effort to try to attract that high-skilled talent, and what that eventually means for the global success of U.S. companies.
We've got 30 seconds. Is it big companies that hurt the most here, Hiba, or is it smaller ones?
So it's usually the larger tech companies in particular that garner the most attention, but it's also important to point out that when it came to first-time H-1B visa petitions for new employment in fiscal year 2025, over 28,000 companies filed at least one. And so what that data implies is that the companies that are benefiting from H-1B visas are actually, very diverse in terms of profile.
Leave it there, Hiba. We thank you very much, Hiba Anver from Ericsson Immigration. Welcome back to Bloomberg Tech. We're checking in on these markets that are under pressure as we enter the last full trading week of this year. We've seen Nasdaq 100 in the red for most of the trading session, up by 0.4%. We now bounce back, but only by 0.1%. Some of the heavy lifting being done by Nvidia. Tesla's at a new record high, which helps offset some of the AI anxiety that's been baked into other names that are trading on the day. But look, there have been some call-outs of particular names in the chip sector in particular. Texas Instruments, off by 0.1%, have been hit further as it falls on Goldman double downgrading the company to a sell rating feeling that there's earnings risk that is being built into this particular chip maker, but we managed to shake off some of that anxiety. ServiceNow, though, is still off by more than 10% at the moment. There's reportedly in talks, advanced talks, to acquire cybersecurity startup Armis, which could value the startup up to $7 billion. Now, that would be the biggest deal that ServiceNow would ever have done in terms of acquisitions. Some people trying to run through the numbers and understand whether the cash has been put to good work. Meanwhile, Intel is actually up 0.25%. It had been trading a little bit lower earlier. It's also in advanced talks to buy artificial intelligence chip startup SambaNova. Interestingly, Lip-Bu Tan, the CEO of Intel, is actually chairman of SambaNova, and his venture firm had been leading some of the Series A rounds back in 2018 for this particular AI compute company that's looking to take on NVIDIA. But let's talk more broadly about the world of technology and how it's implicated by, well, geopolitics. China, in fact, has just started to grant licenses with lengthier terms that would allow European companies to obtain critical rare earths. That's all according to EU top trade official Maros Sefcovic. Bloomberg's Oliver Crook sat down with him earlier today. Just take a listen.
I think we are getting initial reports from our industry that they are getting these general licenses, but we need to have a little bit more granular information to evaluate the whole process. But the fact that this idea was favorably received, that it seems that we are getting first general licenses, and also that the Chinese side was receptive to our arguments that the process as it was set up in April required too much of very intrusive information, too many photographs, too much detail about the supply chains, and I think that the general licensing could be one of the solutions how to address this issue.
What does this mean about global access to rare earths? We can talk about that with Bloomberg senior tech editor Mike Shepard, because this is a fascinating read across to the US. Brussels have been really worried about a choke point, bottlenecks brewing that would implicate to such a degree vital industries, the German car makers. But similarly, those choke points and bottlenecks are here in the United States too.
Well, that's right, Carol. There are so few points of common ground when it comes to trade for the EU and the US these days, but access to rare earths actually happens to be an area where they share this concern, and that is because each side, they see their companies, their economies so dependent on China for access to these critical inputs to all sorts of technology. It is not just the advanced tech that we talk about so much on this program, semiconductors and other things. It also goes into defense equipment, into automobiles, into solar arrays, really into a little bit of everything. And China owns the lion's share of not only the deposits, but also the refining and production of it. So for the EU to say that it is seeing some glimmers of hope in being able to access these rare earths on a wider basis signals perhaps some progress, Carol, in this nearly year-long fight with China over access to these critical minerals.
Bring us up to speed on that fight and the access, because I think it was just last month in November that President Trump and Xi Jinping came to some agreement around access to rare earth metals and materials, but they're still dependent on this April licensing agreement, right?
Well, absolutely. And what we're hearing from our Sefcovic is that the Chinese may be more inclined to grant what are called general licenses. And this is a key word that he used in that interview. It's not just a license for a one-time shipment of a critical mineral, let's say gallium or something else used in night vision goggles or something along those lines. It's a general license that would allow for a longer period of time for repeated shipments to pre-approved buyers. And that would really speed the plow for companies in the European Union and the US. And this is what both sides have been agitating for from China. And it's a key part of the trade truce that was reached between President Donald Trump and Xi Jinping at the end of October. It took effect in November. And it is really something that US officials are watching closely from. And they will be hearing from US industries, especially the auto industry, which has expressed the most concern over Beijing's control over this and the bottleneck that they really began to see in April when authorities in China began to tighten the export controls there. So we'll be watching to see what the signaling is from US trade officials and whether they're seeing similar signs of progress.
You know, Nationwide is more than you think.
That's right. Their social security tool helps me guide clients when to file, maximizing their income.
So when is the right time to file?
It depends, somewhere between 62 and 70.
Oh, it's age. Right. It's not like 2 p.m.
The bond market isn't simple. For some investors, that complexity can be a barrier, but for skilled managers, it creates an opportunity and can be a source of advantage. At Vanguard, our strategy isn't built for one type of market environment. It's designed to perform across all of them.
Remote Mike Shepherd, we always appreciate you. Thank you very much indeed. Now, talking of bottlenecks, surging electricity demand, driven in many ways by AI data centers, is highlighting the need for more power in the United States and indeed globally. There's some good news on the tap in 2026. The nuclear industry is poised to turn on 15 reactors worldwide, but that's actually after a drop in capacity this year. Let's break it down with Bloomberg's Will Wade, covering energy, climate, and all things nuclear. Will, I'm surprised the talk, the hype has been there in 2025, but not the reality. There's actually been less nuclear capacity.
Yeah, we're going to lose about a gigawatt of nuclear capacity worldwide this year. We're going to have 2 reactors that came online and 7 older ones got shut down in different parts of the world. I think the quote that I've heard this year from one of my sources that sums it up the best is like, everything's happening and nothing's happening. Because the thing about nuclear, and my editors, that drives them crazy, it happens really, really, really slowly. So there are 62 reactors under construction worldwide around the world. They're going to start coming on in big waves next year. We're going to get like 10 gigawatts of capacity next year, 10 more the year after that, close to 10 the year after that. So there's a lot coming, but there's not a lot coming on right now.
Just how important is the actual sourcing of power, the idea of nuclear being that energy and climate friendly version of so doing, particularly plugging into data centers, or at the same time, is electricity and the needs of it being hampered by just resiliency in the grid? There's a great story out by your colleagues today, another 5th story on bottlenecks, really looking at a series of obstacles slowing down the transition to a cleaner, more electrified future. And they're really signaling out the issues that we face in terms of just the electric grid and inexperience and congestion there.
Yeah, the grid is another huge issue all to itself. The ability to deliver the electricity is, what happens with the grid, and connecting to the grid takes years. You have to go through all kinds of permitting. So you can plan your nuclear power plant, and it still takes years to get a connection to it. We're going to have 3 Mile Island come back into service in 2027. That's actually a year ahead of schedule, and it was supposed to be 2028, but they managed to get a grid connection sooner. The work to get it ready was always going to take until 2027, but they managed to get the local grid to hook that up earlier, so that's going to come faster. But grid connections are a big bottleneck, not just for nuclear, for any new electricity.
I'll put Will Wade, great analysis. Thanks for talking us through it on all things nuclear and more broadly energy adoption. Now coming up, we're going to be discussing the future of drug discovery, powered by AI. We're discussing it with Chai Discovery's Josh Meyer and Elena Vibok of General Catalyst. There's a new funding round. It's making a unicorn. This is Bloomberg Tech. Chai Discovery. It's an AI drug discovery company backed previously by OpenAI, and it's just raised another $130 million to scale compute, to scale talent. The goal? To build a, quote, computer-aided design suite for molecules. Chai Discovery co-founder Josh Meyer joins us now, along with Elena Vibok, who is General Catalyst Managing Director. You co-led the round with Oak HCFT. So I go to you first, Josh. Congratulations. This is just 3 months after you did a Series A. Why are you doubling down, and what is the money being used for?
Well, first of all, thanks so much for having us here. It's a really exciting time for the company. We're coming out of this year with a series of research breakthroughs where we've now shown that we can use AI to design molecules that we never even thought was going to be possible. So we're really using this money to double down on that research agenda. The model showed no signs of slowing down. And then also really growing the team and starting to take these models and start deploying them. really at scale and starting to create new molecules that, again, we never thought would have been possible to create.
Elena, it feels like this is a relatively pivotal moment in AI's push forward on drug discovery and on healthcare more broadly. You're someone who invests in life sciences. What is it that made Chai stand out, that you thought it needed follow-on money just 3 months after a Series A?
Absolutely. So Chai stood out because 2025 was the year of AI discovery. And what Chai allows you to do is understand and predict the interaction between molecules to design and develop new medicines. And the reason we invested now is because we believe 2026 will be the year of deployment, and pharmaceutical companies that adopt this technology will absolutely leapfrog those who do not. And it's a moment where medicines that could not be discovered any other way will now be discoverable.
And the aha moment in many ways was following the release of Chai 2, Josh. Just tell us why that was so important, the latest antibody generation model that you released and I'm sure suddenly had a load of inbound calls on the back of.
Yeah, so of course this is our Series B, but if you look back at our Series A, we told our investors that over the next 2 years or so, we would try to reach a 1% success rate on this antibody design task, meaning that 1% of the molecules coming out of our models would function in the lab. We thought that'd be a breakthrough moment in the field. But a couple months ago with Chai 2, we actually announced that we could do this with about a 15 to 20% success rate. So I think really leapfrogging again what even we thought was achievable in the past year or so. So that's really been, I think, a big moment for the field. And now moving us away from just research curiosities into models that are really useful for actually discovering drugs.
Elena, that's sort of mind-blowing for many who aren't in the weeds on life sciences as much as you are, that there was only a 1%, that a 1% hit rate was going to be really tangible for the field, and let alone 15 to 20%. Talk to us about what have been the limitations thus far in drug discovery, in labs for pharmaceuticals, and what this changes in terms of AI.
Absolutely. So when researchers try to make a new model, a new molecule, it's essentially searching for a needle in a haystack. It happens in a lab. There's a lot of variability, and it's really challenging. That's why even though we've seen breakthrough medicines and many people benefit from them, there are still lots of areas where people get sick and have no options. What Chai has done is show that they can design computationally medicines that have over an 85% success rate in achieving basic drug-like properties. There's additional research to do, work to be done that takes a drug from the computer into the lab, into people, into clinical trials. But there's been a long-standing hype around AI for drug discovery. And now when we meet pharmaceutical executives and they meet Chai, everyone says, this is the year of deployment. Now these models work in a way that they will actually contribute to new medicines that make it to patients.
And of course, Josh, you've previously been backed by Thrive Capital, Menlo Ventures, OpenAI has been a strategic investor and a place you used to work. But with General Catalyst and with Oak on site, I'm sure those meetings with pharmaceuticals come more thick and fast. But what more is the money being put towards when you talk about scaling this project? How much compute do you need? And how much do you need to invest in GPUs as well as the engineers and the fierce talent wars to get the right people in the door to build the models too?
Yeah, well, I'm thrilled to be working with General Catalyst and Oak here. You know, this round is actually about a lot more than the money. You know, you bring together some of the top investors in this space in healthcare. If you look at the folks joining our board, Annie Lamont and Hemant Naja, these are investors who have been Midas-less healthcare investors, really plugged into the pharma space. We're here with Elena as well, who's just such an incredible thought partner on really building out the business. So the capital is going to work among all the things that you mentioned. We're really putting an astronomical amount of these costs into compute. We're trying to turn compute into better molecules. We run a ton of lab experiments to really test whether the models work in the real world. And we're doing a lot as well in order to start deploying these models, building the right kind of software tooling in order to build this computer-aided design suite for molecules. There's the talent wars as well. I'm very, very grateful to be working with some of the top folks in the industry here. When we started the company, we actually brought together a number of heads of AI from top AI drug discovery companies and we've only continued to build out an exceptional team here. We're a small but mighty team, but we're really putting this to work in order to turn science from biology from a scientific discipline into one that looks a little bit more akin to engineering.
Yeah, Elena, you said a great line that basically there's been a lot of hype around AI and how it will be applied to healthcare. But what do you think helps cut through to those who are laymen to a lot of the real details and data being shown in this, that we will see productivity gains, we will see real deployment in 2026? What's your hope as to what this looks like next year?
Well, I think for next year, the hope, and I think pretty strongly the reality, is that pharmaceutical companies will be able to discover medicines more efficiently. So Josh mentioned there's a lot of compute going in. That's really on the research side. What's incredible is this technology is efficient. It is helping people discover medicines. And to me, the most important thing that lay people will see is when we use these tools, we can discover medicines that take advantage of known biology and impossible chemistry. You could not make the molecule, you could not make the medicine without using this technology. And what people will see are medicines that are curative that would not have been discovered any other way. And that's where lay people will really see the benefit, is in medicines that have impact on their lives.
Chai Discovery investor, Elena Vibok there from General Catalyst, and Chai Discovery co-founder, Josh Meyer. It's been great speaking with you both. Thank you very much indeed for joining today. Now coming up, take a look at the shares of ServiceNow and Intel, both under pressure, both in talks to buy startups. We'll talk about those potential deals next. This is Bloomberg Tech. It's time now for Talking Tech, and first up, Roomba, maker iRobot, of course, is filed for bankruptcy and proposed handing over control of its main Chinese supplier, Shenzhen Robotics. Under the proposed Chapter 11 plan, the company's common stock will be wiped out. Plus, leadership at McKinsey is discussing potential job cuts, reducing roughly 10% of its headcount across non-client-facing departments. This coming as its revenue growth has flatlined over the past 5 years. Now, McKinsey spokesman said that we are operating in a moment shaped by rapid advances in AI that are transforming business and society. And ServiceNow, well, it's closing in on a deal to buy cybersecurity startup Armis for as much as $7 billion, according to people familiar with the talks. Now, the stock is under pressure, as you can see, after analysts at KeyBank cut their rating to underweight this morning, citing mounting threats also from artificial intelligence. Let's just dig in on that particular deal, on the talks from ServiceNow, but also other deals being eyed in tech, including Intel's potential plans to buy AI startup Samba Systems. Joining us to discuss all of this is Bloomberg's Ryan Gould, covering M&A, and as ever, a busy weekend for you covering M&A, Ryan. Talk about ServiceNow first and foremost. Why does it want this Israeli-based cyber company, Armis? What would it help it do?
Thanks, Caroline. I think it's an interesting time to be ServiceNow. You'll note that they just acquired, they announced earlier this month, an acquisition for a company called Veza, or Vetza, depending on how it's pronounced. I think that was worth about $1 billion for the security and risk portfolio. I think this really drives home the idea that you need to be ready for an enterprise the size of ServiceNow for potential threats, potential attacks in the age of AI. This is a massive growth area across the street. You've seen quite a few other sizable cyber deals this year, including CyberArk being bought by Palo Alto Networks. Big enterprises, Microsoft, Google. I mean, look at Google Wiz paying $32 billion for what is ostensibly a threat detection and enterprise management business. As one of the biggest M&A deals in 2025. So I think this is really driving home the point that AI and security go hand in hand.
They go hand in hand. And also AI is fueling M&A in other parts of the industry. I mean, Intel, Lip Bhutan, the CEO of Intel, is also on the board of a startup that you report might be being eyed as well by the company.
That's correct. I think this acquisition would be seen as Lip Bhutan sort of doing a full circle ride almost. Lip Bhutan, the CEO of Intel, was at one point the executive chair of SambaNova. His VC fund, Walden International, was one of the founding investors of SambaNova. SambaNova makes custom AI chips, the type which, if all were to go well, could potentially rival NVIDIA and AMD in that market space. For Intel to get a hold of this, I think this would be seen as Lip Bhutan, really putting Intel in the mix in AI. having an AI platform to go and talk about in front of other AI enterprise customers like Dell and so forth. This would be a big deal for them.
It would be. And it's pressuring both stocks today, particularly ServiceNow. $7 billion would be the biggest they've ever spent. Bloomberg's Ryan Gould, with all the reporting across quite the wave of M&A, it's going to be a big blockbuster 2025 if you're looking at the numbers. But it's also a blockbuster of the day, it seems, for Tesla. Quick check on the markets here. And Tesla is your lead performer in terms of up 4.3%, in many ways driving it to potentially a new record high. At the moment, it's the biggest move since December 2024. At one point, if we hit 481.76, we could be the highest since June, on record for the company. So keep an eye on Tesla as it continues to outperform in the Magnificent Seven names. But that does it for this edition of Bloomberg Tech. Do not forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. We are here throughout the build-up of the last trading week, full trading week, where we still question some of the AI valuations. Tune in throughout. I'm live from London today, back in New York tomorrow. This is Bloomberg Tech.
Dear LaDonna, due to a higher risk of destructive weather events,
your homeowner's policy will see an overall rate increase of 22%.
See a rate change of 45%, 65%.
Your ambition just met its match with Robinhood. Fast, powerful, and precise. You expect more from yourself. Expect more from your money. Your money, your move.
This is the Asia Trade. I'm Annabelle Drawlers in Sydney. I'm Evil Hong in Singapore.
And I'm Paul Allen, live at Sydney's Bondi Beach, where 16 people were killed in Australia's worst terrorist attack. Australian Prime Minister Anthony Albanese has described it and condemned it as a targeted attack against the country's Jewish community.
And I'm Min Min Lo in Hong Kong, where former media mogul Jimmy Lai is awaiting a pivotal verdict in a landmark national security trial in the city.
Well, in Sydney this morning, as Paul just said there, we have the city still grappling with what is the deadliest terrorist attack that we've seen in the country's history. We're also still grappling with the most fatal shooting that we've seen going back to the Port Arthur massacre in 1996. So that is certainly the main story that we're going to be focusing on throughout the hour today. But aside from that, we still have the market dynamics, of course, and we are seeing the ASX 200 coming on today to the downside 0.6%. But aside from the Australia story, I mean, the main one as well for traders is still that ongoing concerns around the AI bubble and valuations that continue to look reasonably stretched, maybe not on a historical basis, but still concerns about really the outlook for demand and also the implementation of spending that we're seeing from businesses too. So that sort of sets the stage. We did see Wall Street ending on quite a sour note going into the weekend. But let's also take a look at what's happening in other markets as well, Avril, with those US futures coming online today. Absolutely, Belle. You talk about that sour note. We saw Wall Street turn lower, and it was really dragged by tech and investors turning away from the AI trade. One they turning towards, it's these value names, financial stocks. That seems to be turning out to be the trade for the month of December, at a time where the likes of Oracle, a company that's spending a lot on data center build out, is said to be delaying completion for some of those centers for OpenAI. We are also digesting some of the Fed speak, some officials talking about how rates still need to be restrictive, others highlighting the labor market weakness. We saw treasuries on the short end outperforming the long end. The dollar, is worth noting, we are coming into today after 3 weeks of declines on Bloomberg Dollar Index. Belle? Well, let's get back to our top story, and that's 16 people are now confirmed dead after Sunday's terror attack at Bondi Beach in Sydney. Two gunmen, a father and son, opened fire on a crowd celebrating the first day of Hanukkah in a beach, or a park rather, next to the beach. Australian Prime Minister Anthony Albanese says the shooting was a targeted attack on the Jewish community. Bloomberg's Paul Allen joins us now from Bondi Beach. And Paul, as you're there on the scene this morning and you assess what's going on, how exactly are we dealing with this, and where is the conversation also likely heading?
At the moment, the overwhelming sense is one of grief. The mood down here, very, very somber, and you can probably see behind me here, there was a floral tribute starting to build up. An Israeli flag has been draped around the flowers, an Australian flag visible in the background there as well. And you'd expect that that tribute's probably going to build up over the course of the day, just a steady stream of people coming here to lay wreaths and pay their respects. Now, as to who was responsible for this, two people, a father and son, and neither of whom were on any security watch list. The father, a 50-year-old, is deceased. He was a licensed firearms holder. He held licenses and legally owned 6 guns. Police say all 6 of those weapons are now accounted for. There are also 2 rudimentary IEDs, improvised explosive devices, found on the scene. They were active but later disarmed by police on disposal. Now, the other gunman, 24-year-old Naveed Akram, his identity became known after it was widely distributed on social media last night, so there was really no point in trying to keep that a secret anymore. He told his mother that he was headed down the coast. In reality, he was with his father at an Airbnb somewhere else in the city. That property now also the target of heavy police presence. Amid all of the carnage at that Hanukkah event, also notable acts of heroism, not the least of which from Ahmed Al-Ahmed, a 43-year-old fruit shop owner who, in extraordinary video, jumped one of the gunmen from behind and disarmed him. Ahmed Al-Ahmed was later shot in the arm and in the hand. He's now recovering in hospital. But like I said, an uneasy sense of calm here today. Police are calling for calm and saying that this is not a time to be seeking retribution.
Paul, this is an attack that has shocked Australia. We're also hearing from other world leaders, including the Israeli leader Benjamin Netanyahu, and he has drawn scrutiny or has said that Australia failed to protect Jews despite warnings. Have a listen to what he had to say.
It pours fuel on the anti-Semitic fire. It encourages the Jew hatred now stalking your streets. Anti-Semitism is a cancer. It spreads when leaders stay silent and you must replace weakness with action.
Paul, what do you make of a criticism such as this from the Israeli leader?
Well, that precise criticism was put to the Prime Minister Anthony Albanese this morning in a press conference. Prime Minister Albanese brushed them off to a degree. He said, look, this is a moment for national unity. He didn't want to get into the politics of it, but he described anti-Semitism as a scourge and it should be eradicated forever. He was also asked in a follow-up question, did you ignore warnings from the community? Because the Jewish community has been very public in saying many of its members no longer feel safe in Australia. To which the Prime Minister responded, we will continue to stand with Jewish Australians and stamp out anti-Semitism in all its forms. Now, it's hard to imagine that line is going to hold water for terribly long. This is inevitably going to become politicized as we head into 2026. The right-wing One Nation Party has been surging in the polls here in Australia, and the former Treasurer, Josh Frydenberg, this morning weighed in on this as well. He himself is Jewish. He called this all too predictable, and that the leaders have been allowing, have been bystanders, allowing the flames of hate to burn. So this incident likely to dominate the political conversation.
Paul Allen there at Bondi Beach, and we're back with you later in the hour. But joining us is Josh Roos. He's Associate Professor of Politics at Deakin University. And Josh, thanks so much for your time this morning. As you just heard Paul outlining there has been this sort of undercurrent already coming that political leaders have essentially been ignoring anti-Semitism on the rise in Australia over the past few years. Is that a fair way of looking at it and a fair criticism that we're hearing as well?
It's certainly a fair criticism. Since October 7, there's been a permissive environment that has allowed anti-Semitism to flourish here in Australia. There's not been sufficient political will, particularly from the government, to crack down on that speech that is not only anti-Semitic, but often cloaked in the language of anti-Zionism and so on, and really that obfuscates what's at the heart, which is the hatred of the Jewish community and Jews. This has been an issue globally, but unfortunately it's played out in its most deadly form here in Australia since the October 7 attacks.
Can you explain then the steps leading up to this, and was this in any way predictable? Should there have been a greater police presence on the scene, do you think, than yesterday at that Hanukkah celebration?
The Jewish community have been speaking about this and warning about it for several years now. And to that unfortunate extent, it was predictable. We've seen in the immediate aftermath of the October 7 attacks, people were congregating in front of the Opera House saying, "Gas the Jews, F the Jews," and many other abhorrent statements that were really whilst condemned, were never acted upon in terms of holding people to account for hate speech. There's been an enormous amount of online hatred directed towards the Jewish communities as well, who have become conflated particularly in the hard left and Islamist mindset with Israel and their hatred of Israel in the context of the Gaza conflict. So Australian Jewish communities have been effectively held to account and put up as the target of a lot of this hatred. Now, there's been, for example, the Anti-Semitism Envoy's report, which came out about 4 months ago, which was very specific about some of the actions that needed to occur, not only to address this deeper undercurrent, but also to ensure the security of Australia's Jewish communities. And it's quite amazing to me, working in the space that I do, that on Bondi Beach, in a very open environment, that there was not sufficient security to at least protect, at least for a short amount of time, the community as they gathered on that beach.
Josh, when it comes to public safety, should the conversation also be about closing loopholes in these gun laws, as one of the suspects or the gunman was said to have not only been known to authorities, but also had a license?
Yeah, so in the Australian context, we have tens of thousands of people with gun licenses, and you can go and purchase a weapon once you've actually gone through that quite rigorous process.
If you're a major artificial intelligence company worth $183 billion, it might seem like bad business to reveal that in testing, your AI models resorted to blackmail to avoid being shut down, and in real life were recently used by Chinese hackers in a cyber attack on foreign governments. But those disclosures aren't unusual for Anthropic. CEO Dario Amodei has centered his company's brand around transparency and safety, which doesn't seem to have hurt its bottom line. 80% of Anthropic's revenue now comes from businesses. 300,000 of them use its AI models called Claude. Dario Amodei talks a lot about the potential dangers of AI and has repeatedly called for its regulation. But Amodei is also engaged in a multi-trillion-dollar arms race, a cutthroat competition to develop a form of intelligence the world has never seen. You believe it will be smarter than all humans?
I believe it will reach that level, that it will be smarter than most or all humans in most or all ways.
Do you worry about the unknowns here?
I worry a lot about the unknowns. I don't think we can predict everything for sure, but precisely because of that, we're trying to predict everything we can. We're thinking about the economic impacts of AI. We're thinking about the misuse. We're thinking about losing control of the model. But if you're trying to address these unknown threats with a very fast-moving technology, you've got to call it as you see it, and you've got to be willing to be wrong sometimes.
Inside its well-guarded San Francisco headquarters, Anthropic has some 60 research teams trying to identify those unknown threats and build safeguards to mitigate them. They also study how customers are putting Claude, their artificial intelligence, to work. Anthropic has found that Claude is not just helping users with tasks, it's increasingly completing them. The AI models, which can reason and make decisions, are powering customer service, analyzing complex medical research, and are now helping to write 90% of Anthropic's computer code. You've said AI could wipe out half of all entry-level white-collar jobs and spike unemployment to 10 to 20% in the next 1 to 5 years.
Yes,
That's shocking.
that is the future we could see if we don't become aware of this problem now.
Half of all entry-level white-collar jobs.
Well, if we look at entry-level consultants, lawyers, financial professionals, many of kind of the white-collar service industries, a lot of what they do, AI models are already quite good at, and without intervention. It's hard to imagine that there won't be some significant job impact there. And my worry is that it'll be broad and it'll be faster than what we've seen with previous technology. I was interested in numbers from the very beginning.
Dario Amodei is 42 and previously oversaw research at what's now a competitor, OpenAI, working under its CEO, Sam Altman. He left along with 6 other employees, including his sister Daniela, to start Anthropic in 2021. They say they wanted to take a different approach to developing safer artificial intelligence. It is an experiment. I mean, nobody knows what the impact fully is going to be.
I think it is an experiment, and one way to think about Anthropic is that it's a little bit trying to put bumpers or guardrails on that experiment, right?
We do know that this is coming incredibly quickly. And I think the worst version of outcomes would be, we knew there was going to be this incredible transformation and people didn't have enough of an opportunity to adapt. And it's unusual for a technology company to talk so much about all of the things that could go wrong.
But it's so essential because
Yes.
if we don't, then you could end up in the world of like the cigarette companies or the opioid companies, where they knew there were dangers and they didn't talk about them and certainly did not prevent them.
Amodei does have plenty of critics in Silicon Valley who call him an AI alarmist. Some people say about Anthropic that this is safety theater, that it's good branding, it's good for business. Why should people trust you?
So some of the things just can be verified now. They're not safety theater. They're actually things the model can do. For some of it, it will depend on the future and we're not always going to be right, but we're calling it as best we can.
Twice a month, he convenes his more than 2,000 employees for meetings known as Dario Vision Quests. A common theme, the extraordinary potential of AI to transform society for the better.
We have a growing team working on, using Claude to make scientific discovery.
He thinks AI could help find cures for most cancers, prevent Alzheimer's, and even double the human lifespan. That sounds unimaginable.
In a way, it sounds crazy, right? But here's the way I think about it. I use this phrase called the compressed 21st century. The idea would be at the point that we can get the AI systems to this level of power, where they're able to work with the best human scientists, could we get 10 times the rate of progress and therefore compress all the medical progress that was going to happen throughout the entire 21st century in 5 or 10 years?
But the more autonomous or capable artificial intelligence becomes, the more Amodei says there is to be concerned about.
One of the things that's been powerful in a positive way about the models is their ability to kind of act on their own. But the more autonomy we give these systems, the more we can worry, are they doing exactly the things that we want them to do?
To figure that out, Amodei relies on Logan Graham. He heads up what's called Anthropic's Frontier Red Team. Most major AI companies have them. The Red Team stress tests each new version of Claude